think most people knew that you were in it, but if you didn't, Josh already had a position, and now you've doubled it?
Yeah, so I said this the day it went public. I said, you know what? I understand it's very expensive. I don't want to take the risk of this thing running away without me having some. Bought a very small amount, and I did say when it drops into the mid-20s, I'm going to add to it. It actually dropped into the low 20s. 2 days ago, I doubled my position. Let me tell you, I bought some at 30 on the way down, and then I doubled that. So I've been buying on the way down. Let me tell you my thoughts on this really quickly. First of all, productivity software is tremendous now. It's going to get even bigger. The total addressable market for something like what Slack does is potentially $35 billion, according to Morgan Stanley. Slack is a category killer. It's a classic category killer. If you look at previous companies that were category killers, it has followed much the same trajectory. It even has the founder still as the CEO. Users love it. Employers and organizations love it even more. The average Slack user during the work week, those 5 days, spends 9 hours with the app open and 90 minutes actually using it. Those engagement numbers are off their charts. They're bigger than Facebook. So they have more than 720 customers right now paying them over $100,000 a year. That's the important number that continues to grow. They are making money, but they're not yet cash flow positive. And they were very upfront about they're not in a rush to be. They have $800 million in cash. This looks nothing like the WeWorks, the Ubers. They're going to spend only $70 million this year ex-IPO costs. So it's not a high cash burn. They can get to profitability when they want to. And they grew last quarter more than 50%. So Wall Street sold the stock off because maybe they wanted 60% or 70%. That is not my concern. I think right now you have an opportunity to buy this thing at a 40% discount from the opening tick. That's why I doubled my position, and I want to be in this for 3 to 5 years. I'm a user of the product. I think it's better than Teams, and I think the stock's going to work over time.
So there's an NHL coach that has watched you talk about Slack on air, and he has asked me the question as it declined. Do you believe the stock has a put underneath it? As the market cap gets lower and lower, does it become a viable target for someone to take it out? I think it's like $13 billion now.
That's a great question. Somebody would really have to not care at all about whether or not it's accretive to earnings, because if you buy it out here, it definitely is not. But people have said these things because the only other real competitor here is Microsoft. Mm-hmm. There are junior versions, but I'm talking about scale with millions and millions of users. They have a superior product to Microsoft Teams, and the engagement on Teams is less than the engagement on Slack. So somebody that says, we want to get into enterprise software in this way, we want this kind of collaborative tool as part of our suite, and there are a lot of companies you could think of off the top of your head. Oracle comes to mind for me. It could happen. I just, you know me, like I would never buy something on speculation that could happen. That's the reason.
No, but that's gravy on top of a meal that you've already put on the table that sounds tasty.
Agreed. And I will tell you, it's not a cheap stock now, but it's not meant to be. What they need to demonstrate to the street is that they can continue to add organizations and continue to add users, and that those user engagement numbers stay there, because that's what gets people to upgrade from free to premium. And so they've got a lot of premium customers, but they should have more, and they will. The other thing with Slack is integrations with other companies' products are really, really well done, and some say better than Microsoft's. If they can continue to do that, this becomes more and more woven into the fabric of the American business and international businesses, and less easy for an employer to get rid of, which means people keep paying. And if that sounds familiar, go look at the last 10 years of Salesforce. That is, for me, that's the example I would use. If everything works out well for Slack, which is not a guarantee, right, it'll look like Salesforce.
So, but stock is on the move.
Do you need to stop? I'll buy it. I'll buy it right here.
I bought it as an investor. If I bought it for a trade,
I'm buying it right here, $24.75.
I don't have to stop it. I don't have to stop it.
Okay,
no, I've already. By the way, I've already ridden it down from the IPO like 38% or something.
I like what you're saying. I'm going to buy it.
If you weren't wearing the suit, would you have that much confidence?
The suit gave him the confidence.
Not only should you buy it, you should introduce it to the firm you work at and watch how quickly all the internal emails disappear.
I told you there's an NHL coach that bought the stock because of you, and I'm going to buy the stock because I want to buy another one of these suits.
I might buy the stock just because you're wearing the suit.
There you go.
I can't buy any stock, so I can't do that.
No.
By the way, can we quickly do?
I think I sold a lot of slack here on this desk. I don't know.
Speaking of newly public companies, Uber, you have an op-ed on CNBC.com.
I do.
Entitled the Uber IPO changed everything for the market.
I feel that way.
I think I get your premise before even turning the page. I mean, I think there is a feeling that it changed.
That was the moment. I think, like, it's hard to say in the moment.
Well, the way that these companies, late-stage companies, are being scrutinized. Is that what you mean?
Yeah, and I say these things having spoken with people that are on the venture side, people that are on the Wall Street side, and just my take on it is that if Uber were trading at 70 and not 30, WeWork would have gone public and everything would have been fine. I think that an $80 billion deal that falls to $50 billion and that many people looking so stupid, it forced everyone to scrutinize the WeWork S1 to a degree that they probably would not have. And I think that was the moment that the pendulum had swung too far. And now it's coming back the other way, and it's not going to be fun for people who are expecting these automatic exits.
You guys agree with that? I mean, it makes sense to me. I mean, if you look back and you say, this is the moment.
Yes.
Some people point to WeWork as the moment.
Okay, and where's Airbnb, by the way?
Rewind.
Where's Airbnb? Shouldn't they
wondering what to do?
Right.
Much better company.
Sounds like they're going to do a direct listing too.
Okay,
like
but they
don't need the money. So
they already should be on the public market.
You know, the tell on it was that there were so many. I had friends call me up saying I'm being shown a block of WeWorks by Goldman.
A block is not that's not good.
Who do you think's selling that? Okay, do you think they'd be selling it if they were going to get a pop on the IPO?
Quickly.
Just as it happened with Josh's nice article here with Uber, and I wrote the similar thing here on CNBC about Lyft, and the issue was that the greater fool, somebody's going to step up and pay more.
Did we run out of those?
And we did run out of those. Right. That was the issue as well.
They'll be back. They always come
back. All right, let me step for a quick break, and we'll come back with final trades.
At Argos, save 25% off homewares across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends 8th of October. Conditions apply. Subject to availability, selected lines.
Rescue stressed, irritated skin with Estee Lauder's newest innovation, Advanced Night Repair Intense Reset Concentrate. Rescue and reset the look of skin with SOS technology. Skin feels instantly calmed, soothed and strengthened, revealing a more radiant, smooth and rested look. Face life head on with Estee Lauder's new Advanced Night Repair Intense Reset Concentrate. Why not try it for yourself? Head to your nearest Estee Lauder counter for a free SOS mini facial. The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
The chance of being hurt while using a leaf blower is about 3,000 to 1. Oh, unlucky. Never mind, at Curry's PC World, there's a 1 in 10 chance to get half your money back on all 2019 LG OLED TVs, like the LG C9, described by Which as simply the best. Get blown away with Apple AirPlay, Google Assistant and Amazon Alexa built in. And there's up to £500 off. So the question is, are you feeling lucky? At Curry's PC World. T's and C's apply. GB16 plus. See currys.co.uk.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
All right, back. Final trades. Liz Young.
Looking at healthcare, I think some of the bad data on opioids, most of the bad data on opioids is already priced in. Second worst performing sector in the S&P. Now is the time.
Okay, thanks for being here.
Thank you.
Suit.
Yes, if you get a rebound, it's going to come from Software Twilio, one of the names you buy.
Okay. Doc.
Tech Resources, TECK, buying upside calls. I bought them during the show.
Josh Brown.
Despite being down in Slack, I am sticking with it for the long term.
Well, you made that abundantly clear. That stock, by the way, Slack's at the high of the day, up more than 7% as we speak.
Carl,
Mr. Weiss.
Because if you get a bad number tomorrow, that means bonds yields go down, this goes up.
All right, good stuff. Thank you, guys.
Thank
Thanks
you.
for watching. The Exchange with Kelly begins right now.
Thank you, Scott. Hi, everybody. Here's what's ahead. Bad data is met with bullish remarks by the president on China. The major averages recouping their losses for now. But how much longer will investors buy the happy talk on trade as the economy continues to worsen? We'll ask. Plus, the U.S. slapping billions of dollars in tariffs on the EU, opening up another front in the trade war. Aircraft, food, and whiskey among the targets. But Delta says the tariffs will inflict, quote, serious harm on U.S. travelers. We will have the latest. And the broken growth stocks. Tesla still down about 6% despite the market's rebound today. It's down more than 30% this year, while Netflix has also gone negative year to date and has make-or-break earnings coming up. Can they get their mojo back? We will ask. But we begin with today's markets, and Seema Modi has the numbers for us.
Good afternoon, Kelly. Staging a big intraday reversal. Here's where we stand at 1 p.m. Eastern, everyone. You can see markets are higher across the board. The Dow currently up 67 points after being down 335 points at around 10 a.m. Eastern following that weak ISM services number, which did come in weaker than expected. Stocks then recovered as the probability of a rate cut increased. Remember, the Fed is scheduled to meet at the end of this month. The turnaround really being led by consumer staple stocks. Names like Campbell's Soup, Costco, and Hershey all higher today in Costco ahead of its earnings report this afternoon. But it hasn't been positive for all sectors, and because the 10-year yield is at 1.5%, that is putting a lid on a number of financials. Some of the big banks like Goldman Sachs, Morgan Stanley, SunTrust, Wells Fargo still sitting on losses for today. And we should point out that even with today's broader market comeback, all 11 S&P sectors are negative on the week. Kelly, back to you.
Not a good week it has been. Seema, thanks. And welcome to the Exchange, everyone. I'm Kelly Evans, and here are your headlines right now. The president saying he has lots of options and tremendous power when it comes to making a deal with China. This is odds for a Fed rate cut this month have jumped to 93% from just 77% yesterday. All of this after the ISM services report this morning. Let's get more with Bob Bassani at the New York Stock Exchange. Bob, we've seen quite a turnaround, and there's a lot of talk about what exactly is the reason for that.
Yeah, you know, this was one of the stranger market moves. I mean, the rally, not the move down, that we've seen all year, really. So after dropping more than 30 points on a disappointing September services number, the S&P reversed 10 minutes later and rallied back to 2881, erased almost all the losses, and then it went positive just a little bit later in the morning. So what happened here? I think there are two issues. Number one, we had dramatically oversold conditions, and then we had, as Seema mentioned, hopes for more rate cuts here. So remember something, the Dow was down 1,000 points this week, and many traders were convinced that somehow the weakness in manufacturing was going to bleed into weakness in the consumer sectors, but they may have pushed this thesis a little too far, at least for the moment. The second factor, hopes for more rate cuts, well, yields also reversed within 10 minutes of the report, and the market odds of a rate cut at the October meeting, as you heard, they rose to about 90% and 50% for December. Now, what was important here is growth sectors like technology have dramatically outperformed the value sectors today. What's value? Well, it's mostly banks, for example. It's retail stocks, materials, and a spattering of industrials. Finally, I want to note we've had huge volume, Kelly, today in the big ETFs, the ones I watch really carefully, the SPDR, the core S&P 500, and the Russell 2000 ETFs. Very, very big volume throughout the day. A lot of people moving money up and down the markets. Back to you.
All right, Bob, appreciate it. Bob Bassani. So weak data sent us lower, and then hopes for a Fed rescue and a trade deal brought us right back. Let's talk about how reliant the market is right now on China, the Fed, on the president. Let's bring in Craig Callahan. He's president of Icon Advisors. Andres Garcia-Amaya is CEO of Zoe Financial. Art Hogan is chief market strategist at National Securities. And CNBC senior economics reporter Steve Leisman is here as well. Andres, let me just begin with you and this market turnaround. What would you primarily attribute it to? Is it as simple as the data was terrible and then the president came out and had some positive commentary on China and that was all people needed to hear?
Well, I could almost make the case that the drop earlier was maybe a little bit unjustified. If you look at the fixed income market, it actually wasn't budging. So if anything, this could have been just the readjustment to actually things are bad, but the Fed is cutting rates, and so is the rest of the world.
Because the 10-year hit about 1.5%.